Welcome to Real Estate 360, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Mike Ambrosio, will provide you with insight and guidance on how to buy, sell, finance, and invest in real estate, and much more. And now, to guide you around the world of real estate, here's your host, Mike D'Ambrosio.
Welcome in. Good afternoon. This is Mike D'Ambrosio with Real Estate 360. Thanks so much for joining us this afternoon. We got a great show in store for you today, and I'll introduce our guests in just a couple of minutes. Just a reminder for those of you tuning in, there is a couple of different ways you can listen to our show. That is on the radio at KDOW 1220. You can also listen to us online at kdow.biz. We come to you 5 days a week. I'm here on Mondays, 3 to 4. Also, we are a live show, and we love your questions, so give us a call. You can chime in and give us a call anytime throughout the show. That's at 1-800-516-1220, 1-800-516-1220. And if you missed any of our shows or want to sign up for updates, you can visit our website at RE360radio.com. And we're talking anything and everything real estate, providing you great education and information. And we're looking forward to our guests today. In studio, I got Brian Crane, VP and Managing Officer at Intero Real Estate in Los Gatos. How you doing, Brian?
I'm doing great, Mike. Thanks for having me.
Good, yeah, thank you. Thanks for coming in. So today, we're going to be talking about 2014 forecasts, what you think the market's going to look like. It's going to be divided up into three big segments. One, scarcity of land and lack of inventory. Talk a little bit about investors, cash investors, people that are doing that type of thing, and the jobs market, which is a huge driver of the economy in the Silicon Valley. So let's get right into it. Let's talk about the first point, Brian. What do you think? Scarcity, lack of land, inventory.
Well, Mike. Clearly, the value in Silicon Valley real estate is the scarcity of the land available to build housing on. Over the last several years, builders were pulling back a little bit and not building as much. So we have less inventory available. I'm reminded of one of my favorite quotes in real estate. It's by Will Rogers, a famous American actor, and he wrote some interesting lines. One of them was, "Buy land, they ain't making any more of it." And
I like that.
In Silicon Valley, that adage holds a lot of weight because we are landlocked basically between the mountains and the bay,
right.
And there's just not a lot of land. So that scarcity creates the value. And I always say, a house in, say, Tracy, California, is, the bricks and mortar cost the same in Tracy as they do in Santa Clara County.
Right.
So the only real difference is the value of the dirt. And anybody that's going to commute over the hill, say to Tracy, I tell them, look, get up on a knoll top or a hilltop and look, and as far as the eye can see, you can see more land.
Right.
And here in Silicon Valley, obviously, you don't see land like that. And that scarcity of land is going to continue to make the prices an upward push on pricing.
And do you think that's why, the city of San Jose, if you look at the general plan for the next 20 years, that's why you're going to see a lot more high-density residential kind of infill development and people living more urban lifestyles, right?
Yeah, there's no question about it. I liken Santa Clara County to kind of other areas that are landlocked, like Manhattan and Tokyo, and we know what the prices are there,
Right.
just astronomical. So I don't see any reason why Silicon Valley, with its limited land supply, won't kind of evolve into that kind of a situation.
Right. So what do you see as far as, do you think that the pricing is going to spread out, just not in the Bay Area, but as far as price increases in value? Do you think you're going to see areas like maybe, Central Valley or outside of the Bay Area? Do you think you're going to start seeing price increases in those areas as well? Or just in the main hub here in Silicon Valley?
Well, Mike, I kind of call it the Google effect. Basically, if you take Mountain View, the city of, and radiate out from there, I think your pricing is going to be as hot as can be and close to the job centers. And as you go further from those job centers, you're going to start to see a lot less price appreciation.
Right.
And also, the further you go from those job centers, the more likely you're going to find open tracts of raw land. And And again, when there's no scarcity of that land, the prices generally aren't going to go up that much. So that's why Silicon Valley is so unique. One of the main reasons.
Yeah, exactly. Well, speaking of that, in the beginning of the show, we usually talk a little bit about the inventory levels and what's going on. And I was looking at it last week. I was on the show with Joe, and it's back to where it was when I first started coming on the show about a year ago. The single families are down under 1,000, I think, in Santa Clara County, that is. And you got the condos, and that's a couple of hundred. I mean, it's kind of interesting to see what's happened during this November and December, huh?
It's been crazy out there. Very, very little inventory to sell. Again, that is somewhat seasonal. We see that pretty normal in November, December, January, where sellers tend to want to not be on the market during the holidays and that kind of thing. So it's not terribly unique to see a downward trend in inventory, available homes for sale. But this year, you're right. It's worse than it was last year, actually. Right. It's a little bit lower.
If you're just tuning in, I'm here with Brian Crane, Vice President and Managing Officer of Entero Los Gatos, and we're talking the housing outlook for 2014 and a couple of factors that are involved in that. If you have any questions for myself or Brian, give us a call at 1-800-516-1220. That's 1-800-516-1220. We love to hear your questions, love to give answers, and we'll go from there. So anyways, getting back to the inventory levels, last week I was on, we were talking about listing your home during the holidays, the whole marketing package and what goes along with that. And so I think especially this year it reigns true with the lack of inventory during the holidays because it is worse than last year. It's a good idea.
You tend to get people that are more motivated that are buying and selling in December. Certainly buyers want to get in and get it done before the end of the year. A lot of times we find some sellers that are anxious to get in and get their houses sold, so there's some good opportunities for buyers as well. Most houses look their best during the holidays, so it can be a fine time to put your home on the market.
Yeah.
And but the majority of folks are going to wait, and they just do.
Now, what do you think about? There's the whole adage of wait till after the Super Bowl or see what happens. There's always even people think okay, give January and then Super Bowl is usually the first weekend of February. Do you think that that's going to reign true in 2000? We're talking about 2014 here, so do you think that that's going to happen next year, or do you think we're going to see a bump up after that, or what?
Well, as long as the 49ers are in the mix, I think we're going to see Silicon Valley real estate stay in the slow lane. But over the years, it seems as the 49ers move their way through the playoffs, our open house traffic and that kind of thing seems to be pretty slow.
Yeah.
And then there's the next big date after that is always tax season. So, by April 15th, the market's usually absolutely on fire. But there's quite a bit of opportunity for a buyer in that January, February timeframe because we do see it just is a little bit lighter usually.
Right. So after tax season, typically in May, June, July, August, that's when we really start seeing the peak. How do you think that this hot buying season or selling season is going to shape up to be in 2014? Do you think it's going to be even hotter? Now, we know prices probably aren't going to appreciate and we'll talk about that a little bit later in the show. They might not appreciate as much as they did this year. But do you think that we're going to see a bigger increase of inventory than we did this year?
Well, I got to start by saying one of my dad's favorite quotes is economists are often wrong but never in doubt. So as I go out and talk about my forecast, I'm not going to guarantee anything here today, but some of the things that I think are going to drive our market. First of all, we're definitely going to see an interest rate increase coming up over the next potentially as early as January from what I've read lately. And that interest rate increase is going to generally slow the market down, I would imagine, across the country. Right. But our area is vastly unique from the rest of the country, and the things that are different are going to be factors in allowing our market to continue to expand, in my opinion, pricing to continue to rise.
Right.
And those factors are essentially a high demand from investors, both foreign and domestic investors, and our incredible economy in Santa Clara County with all the technology companies going full steam ahead. So We could get into some more details about that, but those are the two major factors that are going to overcome, in my opinion, any interest rate increase dampening the market.
Yeah, and I think it's going to be interesting this year because you're seeing people that have increased value. They've gained equity since last year, obviously, and that's a great thing because a lot of people needed that. So I think it's going to be interesting to see how people react next year. Is it going to get them to get off the fence if they're thinking about selling, or they thought about it over the last couple of years and maybe they couldn't, or are they going to sit tight and maybe ride this thing out a little bit, kind of roll the dice and see how much equity they gain next year? It's always a gamble, but what are your thoughts on that?
Yeah, well, Mike, that's a good point. I think that what we're going to see this year was actually flat year over year on unit sales in Santa Clara County. And I think we're going to see an increase in number of sales because of the fact that a lot of sellers are actually they have about 20% more equity this year than they did last year, and they have and if they've been in their house more than a year or two, they probably have about 30% over the last 2 years, maybe even a little more in some pockets, 30 to even 40%. So that equity position is going to allow more people to be sellers. They're able to sell their house. So I think we're going to see more sales. And again, I think there's going to be a tremendous continued demand as long as our economy stays on track.
Yeah, and it's going to be interesting to see, too, if they are going to have more equity to sell, but then let's say they want to move up, right? And then the interest rates might be a little bit higher. How's that going to affect their purchasing power? It could be. It's kind of an interesting situation. Now, granted, they'll probably be in a pretty good situation if they had gained a lot of equity and they're looking to buy up. But the loan situation, if they need that, is going to be an interesting one to kind of keep track of.
Yeah, no question, and it gets into something we were talking about earlier before the show, and Intero tracks the S&P 500 versus the Santa Clara County real estate market, and we basically always see that the S&P, it kind of leads the real estate market in Silicon Valley. And that is the trend that we're continuing to see.
Yeah, I want to talk about that a little bit more on the other side of the break. But we're going to take a quick break. When we come back, we're going to get to some of the questions. Give us a call. We're at 1-800-516-1220. That's 1-800-516-1220. I'm Mike D'Ambrosio, sitting here with Brian Crane on Real Estate 360.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Mike D'Ambrosio.
Welcome back. This is Mike D'Ambrosio, and I'm with Brian Crane, Vice President and Managing Officer at Intero Real Estate Services in Los Gatos. We're talking 2014 real estate market and what it's going to look like, talking anything and everything real estate. Give us a call if you have any questions, if you want to, see what's going to go on in 2014 and get Brian's opinion on it. 1-800-516-1220. That's 1-800-516-1220. We'd love to hear from you. And I'm going to have actually a little quiz later in the show. At the end of the show, I'm going to ask a question of something that Brian said today. And next week, if you call in with the answer, I'll have a gift certificate to a certain restaurant for you guys. So pay attention. Anyways, we were talking about the S&P 500 and how that tracks with Silicon Valley real estate. And it's interesting. At our office meetings a couple months ago, you first showed this chart, and I was blown away by it because it's almost identical. It's pretty crazy, and we could send this to you, by the way. If you guys are interested, visit us at re360.com or email me, Mike at re360.com. I'd be happy to send you this chart because it's pretty amazing, Brian. I mean, how closely it is, and I'm not sure if it's like this around the rest of the country, but this with the Silicon Valley, I was just blown away by it.
Yeah, Mike, with our prices as high as they are, I think a lot of our buyers are dependent on how their company stock is doing, and we see a lot of people coming out of stock to come up with the 20% or 10% down payment, whatever percentage they put. A lot of it's coming out of stock. So as the stock market climbs, we usually start to see our market climb right behind it, and people are cashing out of their Silicon Valley company stock and buying into property.
Right. Well, do you think that, I mean, especially with some of the new IPOs and people that are, they're going public, do you think we're going to see that trickle down into the market? I mean, we don't know who's going to do that next year, but do you see a direct correlation with that? Like when their company goes public, they have a certain waiting period, and then they use that money to possibly buy real estate. I mean,
yeah, there's no question about it that our market is a tremendous beneficiary of the money coming out of these IPOs, and California real estate, Silicon Valley real estate is, investors have long been a big part of our market. The last year was the first year in 6 years that the investor buyer declined. The number of cash buyers last year was 27%, and it had been growing for the previous 7 years, all the way up to 30% of all buyers were cash buyers the year before last.
It's amazing.
So
30% of all buyers last year were cash buyers. It's amazing.
Yeah, it's a big percentage. So these investors are seeing Silicon Valley real estate being as competitive an investment in many cases as other options like the stock market and that kind of thing.
Right.
So yeah, it's been pretty amazing as far as the investment value perception of Silicon Valley real estate.
Yeah, I bet as they see, based on, they see the returns, let's say if they went into the stocks or bonds, and then they see the returns if they buy a piece of property, flip it, or buy a piece of property and hold it and get rents for more on their money. They'd be making more of a percentage on their money than they were sitting in the bank. Because in the bank, what are you getting? You're getting peanuts in the bank.
Yeah, so it's your trade-off, right? You're getting in the bank, you're getting 1% maybe at the most, and in bonds you might be getting a little better than that. And investor perception is that Silicon Valley real estate yields a better percentage than that, and many argue that it's quite a bit safer than that. Mm-hmm. I will say one thing that I'd like to throw out there for any residential real estate buyer. Mm-hmm. It's really, as a broker and as a sales agent over the years, I've always told buyers, you got to be willing to stay 3 to 5 years in the market. People that are flipping and making profit right now are professionals. They're doing this on a daily basis, and they're really grinding out the deal. And it's very difficult in most cases to flip and make profit consistently. Right. So I'd like to throw that out there as a caveat. Long-term Silicon Valley real estate's a great place to be.
Yeah, I think that's great advice. I mean, I remember on a deal, one deal I was doing, you have people that come in and, it's a big decision, obviously, to buy a piece of real estate. It's not like you're buying a cup of coffee here, right? But they are investing their money and what I believe is one of the best places in the country, if not the world, to invest your money into real estate, so.
Absolutely. It's the greatest place in the world, I think, to be a property owner.
Oh, yeah. We're sitting here with Brian Crane of Intero Real Estate Services. Love to hear from you guys. This is Mike D'Ambrosio with Real Estate 360. We'll be right back.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Mike D'Ambrosio.
Welcome back. This is Mike D'Ambrosio with Real Estate 360. We're talking anything and everything real estate, education and information, good content. Give us a call if you have any questions. That's 1-800-516-1220. 1-800-516-1220. Would love to hear from you if you have any questions for myself or for the gentleman I'm sitting with live in studio, Mr. Brian Crane, Vice President and Managing Officer at Intero Real Estate in Los Gatos. And we're talking the 2014 outlook for the market and everything that's involved in that. So let's. We were just talking about the S&P 500 and how that tracks with Silicon Valley, and kind of along those lines, the job market is another huge driver, and that's really the third big point we were going to make today, and how that affects the real estate market. So maybe you can explain a little bit of where your thoughts are and where we're going in 2014 in regards to that.
Yeah, great, Mike. One of the things that I've always liked to do over the years, the famous question you get at the cocktail party is, how's the market? How's the real estate market, right?
Yeah, especially during the holidays, that's like the number one question.
Exactly. So what I like to do is turn that around on people that ask me, and I say,
yeah,
well, tell me about your company. Is your company hiring these days?
Right.
And if they tell me, yes, our company is hiring these days, I'd then tell them the market's great. It's going to continue to be great.
Right.
But if they tell me they're doing layoffs and they're hiring freezes, then I'd say that the leading indicator is that we're going to be in trouble. The bottom line is, the jobs economy in this area is phenomenal. We've got a tremendous number of high-paying jobs. The technology companies continue to reinvent themselves, and all that reinvention is bringing quality, high-paid jobs to the area, and that continues to expand our buyer base, and that's going to just continue to put upward pressure on pricing as well.
Right. Do you think that, and even last week when we were talking about the holidays, a lot of times people switch jobs maybe near the end of the year and start at the beginning of the new year. So, sometimes we see a little bit of a flurry near the end of the year, even at the beginning of the year, of people that are, relocating, or executives that are coming into the area to start a new job or a new startup. So sometimes do you see that kind of drives activity in the Bay Area?
Yeah, absolutely. One of the reasons why real estate gets a bad rap in December and January is because half the country's under snow, and you can't really buy a house when it's 6 feet under snow. But in our area, it doesn't snow very much, and so we have pretty good markets all the time. There's no question that in December, we're going to see a lot of investor-type sellers trying to get out before the end of the month,
right?
Because taxes are probably going to be higher for most everybody next year than they are this year. So I think we're going to see a flurry here. December's going to be strong. People are going to want to be getting. A lot of investors may be anxious to move out before the end of the year.
Yeah, and we definitely don't get any snow. I mean, we're just having cold weather, and people are freaking out in this area.
Yeah,
people back east are like, "What are these guys doing over there?"
There was a little ice in front of my house this morning. I was like, "Where did ice come from?"
Yeah, exactly. What is that?
Yeah, exactly.
So no, I think definitely next year in Silicon Valley, the amount of jobs and companies like Twitter and Facebook and LinkedIn. I mean, I just said social businesses, but there's other ones too. Startups and a lot of VC money that's coming into the area, and it's going to be interesting to see what happens the next year as people go public and their money starts filtering into the market, especially up the peninsula. Don't you think?
Yeah, no question about it. The San Jose metro area actually was the highest growth area for jobs in the state of California last year. Wow. At roughly 4% increase in jobs. And we led the next highest area was Orange County with 2.3% in growth in jobs. So, definitely we're going to lead the way in the jobs market, and that's going to be a great driver for demand on property.
Yeah.
And so that's going to continue to put that upward pressure on.
It's going to be interesting to see what happens, definitely. Well, we're going to take a break. Give us a call if you have any questions, 1-800-516-1220. That's 1-800-516-1220. I'm Mike D'Ambrosio, sitting here with Brian Crane of Intero Real Estate Services. We'll see you on the flip side.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Mike D'Ambrosio.
Welcome back. This is Mike D'Ambrosio with RE360, sitting here live in studio with Brian Crane, VP and Managing Officer of Intero Real Estate Services. We have a couple more points to make, but really quick, we have Art on the phone. Art from Oakland. Hey, Art. You there?
How you doing, Mike?
Hey, how you doing?
Good. I just had a question on, I heard earlier that you said that if you had your property for a couple years, you probably got roughly about a 30% increase. And I was just wondering, going forward, Do you see the same in townhomes and condos as far as like appreciation with the single-family homes on the like peninsula, that area?
Yeah, Brian, why don't you take this one?
Yeah, Art, my experience with single-family homes and appreciation versus condos and townhomes appreciation, in my opinion, they're both going to appreciate about the same, except the timing is going to be a little bit more tenuous with a condo and townhome. And because of that, what you see often is people go for the single-family home, and then when they can't no longer afford those, they jump into condos and townhouses. So condos and townhouses usually trail the market while the market's going up, but they normally appreciate pretty well, pretty much lockstep with single-family homes, but they're trailing the market a little bit. And then when the market tapers off, the condos and townhomes usually start to taper off quicker and sooner. So your timing needs to be a little different with regard to buying and selling those, but the appreciation rates are usually pretty close.
Yeah, do you see the, I guess, the overseas investors as well as the domestic investor looking into that market at all?
Absolutely. Both types of investors are, like we said earlier, they're definitely keying in on Silicon Valley real estate, not only for the steady cash flow and the quality of tenant, but they're also getting long-term appreciation in the neighborhood of 6 to 8% over the last 40 years. So that's a good bet, and I think that's a statistic people are hanging their hat on when they're buying any type of property. The peninsula you mentioned is going to be hot as ever because of the job centers there, and the easy access to the jobs are what people want.
Okay.
Thanks, Art.
Thanks a lot, Brian.
Hey, thank you for the call, Art.
Thanks, Art.
Okay. Bye.
Great question by Art, and great answers, Brian. I think it's interesting how it does trail. They do trail the single-family market, and you got to kind of play along with that, and kind of judge it a little bit. So it's an interesting market.
Yeah.
Overall, it seems like you're pretty bullish on the market for next year, and I'm just curious: do you see anything that's going to derail that, or do you see any headwinds in the way that are going to, maybe affect that appreciation?
Absolutely. I think that it's inevitable that interest rates are going to be rising with the Fed being kind of influenced to stop the bond buying every month. They're buying $85 billion worth of bonds, which is kind of artificially lowering interest rates.
Right.
And there's some pressure on the Fed to stop that process. Last I read in the weekend Wall Street Journal, they were talking about maybe starting to taper the bond buying as early as January now, with the jobs report last week came out at 200,000 for last month,
right.
And that was a record jobs report. So the headwind to the real estate market is going to be interest rates. I think it wouldn't surprise me to see interest rates. We talked about this before the show, Mike. Probably up, potentially up 1% or so, from 4.25%, 4.5% up to 5.25%.
Yeah.
5.5%. And
I wouldn't be surprised if by this time next year we are, maybe a point above. It wouldn't be a surprise at all.
I wouldn't be surprised at that. And as rates rise, affordability drops.
Right.
And as affordability drops, you'll see a little bit of downward pressure on pricing. But I think those other things we talked about, the amazing scarcity of available land to build, and the number of investor buyers out there that are bringing cash, and even the domestic and foreign buyers that are bringing cash, that's a lot of upward pressure on pricing. And then the last thing is just the number of people flooding into the valley and the peninsula to get these great jobs, and they're also giving a push to the market.
Yeah, it's going to be interesting to see, how they are spending their money, and when the interest rates do rise, how much it's going to affect their purchasing power. And how much that affected purchasing power will then affect the prices possibly appreciating. Now we know, we don't know for sure, but we know it's definitely not going to be 18% again in 2014. I'm pretty positive and comfortable in saying that. But we will see, I think, a good amount of appreciation, and it'll be interesting to see what those buyers do with that and how they react.
Yeah, I think the interest rates are going to cool it down a little bit, but with those three major factors in play in Silicon Valley, I think we're going to see, continued upward pressure on pricing, and the long-term average is 6 to 8%. I would not be at all surprised to see to see somewhere in the 6 to 10% range appreciation as we get through 2014.
Yeah. I wonder, how we like to call them flippers, right? The flip investors are people that buy and fix them up and sell for profit. We've seen obviously a tapering of that in the past year. I wonder how much more we'll see in the coming year.
Well, with a tremendous number of fewer distressed properties, the flippers have, and the investors in general, have fewer homes to choose from, and quite frankly, fewer houses to buy. And then there's also a lot of now competition. People got onto that bandwagon and started flipping property, and that's all good. And most of them have done okay. But as the appreciation rate slows down a little bit. Yeah. Your mistakes as a flipper become quite a bit more apparent.
Yeah, magnified, definitely.
Yes. Yeah. So when the market's going up 18%, you buy a house and maybe you bought it at the wrong price, maybe a little too high. Well, with an 18% appreciation rate, you're still going to be okay.
Right.
But when appreciation slows down a little bit, the flipper and the investor that's in it for the short term may be out there hanging a little bit longer than they would like to be.
Yeah, and what you mean by that is they might have the property in their pocket a little bit longer than they originally wanted, right?
In their pocket a little longer, and maybe not making the profit that they thought they were going to make.
Yeah.
Certainly a rising appreciation market solves a lot of mistakes and makes up for a few errors in judgment when purchasing the property.
Right.
In any case, I think there will still be room for people with cash. A lot of homes selling that way, and the investors are still going to have plenty to choose from as we get moving into 2014.
Definitely. Well, we got a couple quick points to wrap up on the other side of the break, and this is Mike D'Ambrosio with Real Estate 360. I'm with Brian Crane from Intero Real Estate Services. Happy to have you here, and we'll see you after the break. Thanks.
For more information on today's program, visit RE360radio.com. That's RE360radio.com. Welcome back to Real Estate 360. Streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RE360radio.com. That's RE360radio.com. Again, your host for today's edition of RE360 Radio, Mike D'Ambrosio.
Welcome back. It's Mike D'Ambrosio with RE360 Radio. Thanks for listening in today. I think we've had some great content from Brian Crane, Vice President and Managing Officer at Intero Real Estate Services in Los Gatos. And actually in Los Gatos, right down the street from where we have our RE360 monthly mixers at the Toll House. And Intero is located over on North Santa Cruz Avenue by Campo de Bacci. And we love it there. And why don't you tell us a little bit about the team at Intero, maybe a little bit of brief history and all that good stuff.
Great, Mike. Thanks for the opportunity to be on your show and talk a little bit about Intero Los Gatos. We started Intero back in 2002, November 2002, so we're 11 years old. We moved into Intero Los Gatos. We built the building there in Los Gatos and moved in October of 2003, so we just had our 10-year birthday anniversary there in the building. We've got over 100 realtors that operate out of there, and I think the cool thing about Intero Los Gatos, we've got a lot of quality people that are all doing kind of different things. A lot of entrepreneurial agents, very creative. Intero in general is an entrepreneurial, creative company designed really to have the agent in the center of the transaction.
Right.
And the agents that we have really epitomize that. They're the creative folks, the entrepreneurial types. For instance, your radio show here, Mike, is pretty cool, and that's pretty entrepreneurial to be out, getting the word out on the street and educating the public. And I think that's a great service you do, and I think it's a great opportunity for the public to be educated, and you do a great job of it. So thanks for doing it.
Thank you. Yeah, and I think we have a lot of, at Intero Los Gatos, we do have a lot of creative agents, and I think thinking outside the box is how you get ahead in anything, and I think a lot of our agents fit the bill on that. And it's really a fun atmosphere to be in and a fun environment, and I think you do a great job creating that atmosphere and environment for our office as well.
Absolutely. Well, thanks for that, Mike. We try to hire quality people. We do have a kind of a hiring criteria in Intero Los Gatos. If anybody has any interest, feel free to have them give me a call, and I'd be delighted to talk to anybody about a career in real estate. Or obviously you're on the selling end, and I'm sure they could call you if they had any interest in listing or selling.
Of course, yeah. And on that note, so I got a new thing that I want to do on this show is if you've been listening during the show, hopefully you've been retaining the content. And my question for this week, and you can email me the answer, and whoever gets it right will get a gift certificate next show. So the question of the day is, which stock market average does the Silicon Valley real estate market track closely with? That's which stock market average does the Silicon Valley real estate market track closely with? So you can email me, Mike at RE360radio.com. We'll pick a winner next week. You can always give me a call at 408-357-6177. That's 408-357-6177. Facebook.com/Mike D Real Estate. That's Facebook.com/Mike D Real Estate. And you could check out the RE360 blog and podcasts at RE360radio.com. And also, Intero Los Gatos' number is, Brian.
Oh, our number is 408-357-5700. Feel free to give us a call there.
And InteroRealEstate.com. So, hey, I want to thank you guys for listening in. Thank you, Brian, for being here. Brian Crane.
My pleasure. Thank you, Mike.
Brian Crane, Vice President and Managing Officer at Intero. Thanks for listening in, everybody. This is Mike D'Ambrosio with RE360 Radio. We'll see you next week.
Happy holidays, everybody.
Happy holidays.
You've been listening to Real Estate 360 on AM 1220 KDOW. For more information on today's program, visit RE360radio.com. That's RE360radio.com. AM 1220 KDOW.